Good afternoon, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out Ryan Mastro and his afternoon show with Market Chameleon and OptionsRobot, looking at different option strategies. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, OptionsRobot, Ryan, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon, OptionsRobot, tools, and products. With that, one last look at the disclaimer, and let's welcome Ryan Mastro to the stage. How you doing, Ryan?
I am doing well. How about yourself?
Great. And we're sharing your screen, and we're ready to roll.
Awesome. So yeah, just a little bit about market, right? We are we're doing very well today in the semis, right? There was news about NVIDIA basically investing in OpenAI, and you know what's going to happen with that money. OpenAI is going to turn right around and buy NVIDIA chips. So it's funny how that can happen. Someone call that a Ponzi scheme in terms of trying to generate revenue and all that, but it's crazy how it happens. So they're doing a lot of that. They did it with CoreWeave. They're doing it with SMCI and investing in companies, and those companies come back right around and buy the chips. So pretty crazy how they can keep generating revenue without really doing anything. The money just keeps spinning here. But nonetheless, when you look at the chart, again, you can look at it anywhere you want, but the chart there, right back up to all-time highs. We can do that right through, come over here and look at just stocks, or we can go to screeners. I know for a fact that it's right at the top of the screener right in here. So again, massive volume today. Look at the amount of shares traded, 251 million shares with an average volume of 182. Another big name that was moving today, Apple, right? Apple was up 4.3% today. So they really liked a lot of the big tech. Some of them out of favor though. I will highlight something like, do we have it in here? We do. We have Amazon, 39 million shares, right around their average price. But when you start to look at the stock today, it looked a little bit ugly. So I don't know if we can zoom in here, enough to really show you. Actually, let's go over to OptionsRobot for that. So let's go over here and go to Amazon, AMZN. There we go, Amazon. And you can see the rollover here. Kind of looking a little precarious, right? We're kind of in this zone. Like, why was Amazon down so much? Kind of almost starting to look like we could give some back, right? Maybe retest some of these bigger lows. So that's a little concerning. You look at like maybe a Microsoft. Microsoft's not doing bad, but it's really not doing great either. We got up, made a little rounding bottom on this one, and not really being able to take and have a follow through like we had hoped end of last week, because there was a really strong candle on Friday, but not able to really bring anything back into the mix here. Something like a Google, right? Didn't do much today at all, but was down, right? So why is Apple the big dog along with NVIDIA? Let me just show Apple almost up to its all-time high here. We're about 260, I believe, 260.10 on the all-time high on Apple. And then we have what was the other one that I want to show? NVIDIA on the chart. And you can see NVIDIA is right up against, and actually made a new all-time high today, 184.55, but kind of right up against all this resistance. Basically starts to almost look like a big kind of pennant or a flag over here, like this thing could really start to explode. So again, $100 million coming back to them in terms of investments. Okay, how does that play out? If it's going out the door and coming back, I'd call it a wash, but the market loves it. So we'll have to see how this starts to play out. Do they continue with the follow through? Now, here's the kicker. We do have MU earnings tomorrow night. MU is going to be reporting. So I think they're expecting, we can look at what they're expecting by looking at the options. Let me go back over here to trade real quick. We'll go to option chain, and we'll go right down to MU. And this goes right to the at the money. So we're looking at about $16, $17 on the offer of the straddle. Just gives us a rough idea of where the market makers are willing to sell their implied volatility. So this is something that I'm sure Will and Dimitri have used all the time as a rough proxy of where the market thinks this thing could go. within this expiration. So that's by Friday. So they're expecting roughly a $16, $17 move in terms of earnings. And then obviously the implied volatility will typically fall off. So something to have to keep an eye on here. So a couple of names though. Let's come back into our, let's stop that one. And let's go back over to our scanner. Look, a lot of these are just pure volume, right? In terms of the big stocks that are coming in here. Berkshire Hathaway, obviously a good amount of volume, big name. Oracle announced more stuff with TikTok today. So that had a nice little pop. Not going to touch that one. The implied volatility continues to go up there. And I didn't really see much in here that I liked on this scanner. I went through most of these that are different names. Taiwan Semi, obviously that was a big name today as well in terms of the chips. Decent volume here. Broke out to new all-time high. Tesla, another one that was looking very, very good today. Closed at 434, kind of right in the middle of its range, but still strong. So I think we go back over to options and use the unusual options volume to see if there's any other names in here. Now, a couple of these really jumped out to me because of lower priced and still look very good in terms of where they could go. BMNR was down a little bit, but again, maybe something that catches some people's eyes. I like the SoundHound, right? To come back over here to OptionsRobot just to look at SoundHound on the chart, SOUN. And oops, I wanted to look at the chart on that. Let me do that over here. So SOUN, looking at the chart here from a technical perspective, we're just about to take out all of the highs and really start going and starting to rock and roll. So this could be one, if you like the pattern, you like what's going on in AI, you like maybe more NVIDIA, more semi chips, really going to be moving forward, more investment in open AI. Does this really set the stage for the bigger picture for a couple of these? So let's look at a entry bot for this one. High of the day is 1765. So I'll say if we get above, and SMR is another one we looked at last week that had a great pop. So let's look at SOUN first though. SOUN, let's do greater than 1765, 1765. And I'm just going to buy an at the money option here. I'll buy the 1750 slightly out of the money. I'll do it in a quick defaulted way so that I can basically say, just buy my option and I want to own it. So this will basically start me at the mid, work my way up on that. So click create. And what that does then is it puts me into my templates. Is there something here that I would like to do from a templated perspective where I would want to roll my options up? For a SoundHound, we're talking about a stock that moves about $1.14 a day. So I may want to do something a little bit tighter than this, and maybe in relation to the options. So maybe if the options are going up by a certain percentage, maybe then I want to basically roll them up. I could do a couple different things there. I could move over to other ones where that one's larger. Let's see what I have over here. What's this one? This is the 3 rolls, 20% since inception. So we could do something along those lines. So what this is going to do, I'll show you the view here. And what it does, if I get in through the entry bot, get into this option, and I make 20%, it's going to roll me up to the at the monies. It's going to roll me up again, and then I'm going to exit. Okay, so it's going to have a pretty good move in terms of the option price. Now, the only issue I have with that is that the option prices are a little bit lower, so it's not going to take that much. So I may want to adjust these to be something like 30%. So something a little bit larger. Maybe at least on the first one, I'm going to do that. So I'm just going to do that and click confirm. So that'll adjust me a little bit. And then again, these will all play off of this one after the first roll. All right, so I'll leave the other ones and I can always update them if I want. So that builds me, and just by me setting that template very quick, I have a system in place that I can exit my trades along the way. Now I can always go back into this. Since I don't have any stops built into this template, I can always go add a stop if I want to. So if it gets up to a certain point of profit, maybe it gets up to 20% in terms, let's just show that real quick. I'll show how that works. So if I have an option value and let's see, I don't want to have a max. So it's a percentage drawdown from the max gain since inception. So let's say I go up 20%. I don't want to go anything less than going back down 10. So that means I'm going up 20%. If it starts to fall back, I'm still up 10%, then I'll get out of my trade, right? So I'm just click exit, and I'm going to do that on a quick and say create. Okay, so that will show me, all right, and that'll show me right here. So I have an either or, right? Either this is going to happen or this is going to happen once I get into the trade. So I'm going to have profit, or it just sits there in between, sits into that range. But if I start to have any pullback, it will get me out of the trade for a small pullback on that one. So I can do that to each one, but in the essence of time, I will move on to another trade idea in here. Now, there were several trades that caught my eye. I typically like to give out a bull and a bear. One of the bears that I thought was interesting was right in that mix, Amazon, and mainly because of the bearish stance that it had today, right? It basically rolled over. Whoops, sorry, I wanted to zoom on that for you. And it started to look pretty ugly. So I think you could use something if we zoomed in a little bit more. Just trying to get you to a good zoom so you can actually see the chart and see some of the detail. So I think if you were to take out this low back here, that could start to give us a bigger rollover, right? That could start to maybe even retest lows over in here. So we're moving at a clip, and I have another screen over here, so I'm just cheating. The clip, we had about almost $5 of ATR on this. So this could be one that we want to enter a trade log, an entry bot, I should say. Let's do Amazon to the downside. Amazon. And we'll say if the stock were to break down below that low, and I'm going to cheat, that low over here is 226.29. So 226.29. And I'm going to say if it breaks down below there, I'm going to add a put option. Since I know that it's breaking below, it automatically says put right here. And I could use, maybe I'll use the out of the money. So I'm going to use a slight out of the money there. And I'll do that one as quick. Seven slices over 5 seconds each, and try to get into my put there. And then again, that's going to send me right to a template. So it's automatically know I'm trading puts, so I'm going to roll the puts in here for something that is, let's see, I want to do, maybe I'll do, no, that's a little much, but we can play around with this one. So this is basically saying if, let's just look at what it's saying here. So if the option gains, so I'm making $2 on the option, so that's $4 of movement, probably a little much for this scenario, knowing I'm only moving about $5 a day. So I can adjust that and say, let's lower that down. Let's say I only want to do $1. So that's $2 of movement. And again, roughly at the money option. Maybe we're trading slightly out of the money. So, I'll keep it at $1. I could do it as a percentage if I wanted to. And I'm going to keep everything else. I'm just going to keep rolling down, and I'll do midpoint on that one as well. So that one is for $1. This one, maybe I'll make it a little bit larger. And let's say I want to do $1.50. So $1.50, and then just hit confirm. So now you can see the first roll would be down at the option gains value of $1, and I'd be rolling down to the at the monies. And then for the next one, if it gains $1.50, I would be rolling down to the at the monies. And then I have $2, and I have another $2. So I can adjust these along the way. So that is that's two ideas that I think you got a bull and a bear. Now, just to talk about a couple other names, let's go back over to Market Chameleon, because I think it's important to look at some of these names.
Hey, Ryan.
Yes, sir.
I don't want to leave you with no time at the end, because a bunch of questions did pop up.
Okay.
One is one of the names in this list. Jim was asking about Snap. It's relative. The amount of option volume in it is the relative volume is 5.0. Is there anything you would see or do in Snap looking at that?
So Snap, let's just kind of come back over here real quick and look at the chart. And I had looked at Snap earlier in the day, and I just kind of didn't see anything that really jumped out at me from a technical perspective. So it was up, but it reversed off. So good volume. It did move up. I kind of felt like you do have a big gap back here, I believe. So let me just zoom out a little bit on this. So you have a big gap. I kind of felt like this ran up to this area, hit that area right in there, kind of filled the gap on the low, and then just got sold into really hard. So I don't like to say I'd play a reversal and play it to the bear side after the big run, but there's just really not enough here unless maybe you have a bullish trade tomorrow and you start to feel pretty good about it. I think tech, pins was down. You look at some of the broader names, like even Meta was down today. So I didn't really see anything that I really liked there. I mean, to me, Pins is almost a little bit more bearish than bullish because of the stance on it right now. And then you had Meta that was rolling over as well, and Meta was pretty ugly today. So I don't know if I'd want to touch Snap unless I started to see something on the charts first.
All right, we had another question. Do you see anything in QUBT? I'm not familiar with that.
That's a quantum name. So QUBT, that is quantum computing. There's several of these that I watch. So I'll just kind of run through those real quick. QUBT, this is one I believe today had news that they did a secondary offering after the big run on Friday. So you looked at something like a Rigetti RGTI. This had a phenomenal move the last couple of days. I've been playing this in a long-term service, and it's been absolutely home run in the last couple of days. You look at a QBTS, I believe this is D-Wave, QBTS, and you go to that one. That's had a phenomenal run as well. You look at, what was the other one that I've been watching? Quantscape, that's an e-car battery, but that's done pretty well. That's moved up along with the market. There's a couple of these names that are like, I mean, looking at the SoundHound, right? AI, that was, that's the one we just talked about first. So that's had a good move. You look at other names in that space, like a BBAI, right? That has been moving very well. You look at names like IREN, which is energy, and you're starting to see a little pop out of that name. So just trying to think what else was moving. APLD was on my list today in terms of other names. That had a big move on the upside. But to come back to that QUBT, I like the pullback. I like the opportunity to get in at a price because it's not really bad for the company in general. So if you believe that these quantum names are going to continue to try to power higher, then this could be one you play on a pullback. Maybe you play something through the high, and then your first targets are up to just to try to recover to the close and the high from yesterday. And then you got a little bit more run, just a little bit. But if you look at the chart, you only have a little bit more room to go to get up to the all-time high on the stock. So I would probably consider rolls right around maybe the close of yesterday, then getting back up into maybe the close of back over here back in December of 24, and then the high of that day back in December of 24. So again, that could be a really good run in itself to get all the way up to like 27. So that's would be a hell of a move. To go from 20 to 27 in even a short time period, right? We've done it though. Yesterday it went from 17 to 23. That's $6, almost $7. So it's definitely doable when they really, really want to squeeze these things.
All right, good news today. We have quite a few more people in the chat asking questions, so I'll keep hitting you with them. Henry's asking, and Henry's first time to this show, any tips on collar options strategies? And he said maybe an OKLO. I don't know if a collar is something you take advantage of occasionally, but that was his question.
Yeah. And I was at a conference in Miami. I was asked to speak, and one of the things I actually talked about was collars. Now, collars I would typically recommend for trades that have done exactly what's going on here. Now, if you're in a short-term trade, maybe not, right? If you just kind of want to protect yourself, maybe you buy the put. The collar in something like this, though, is so strong. I'm sorry, the momentum on this is so strong because of you can see on the chart, it's just been going. So the collar is going to cap you on the upside. I may be a little bit more, or if you go really wide, I'd be okay with it. But from again, just for people to know what a collar is. So for example, if I'm long an option or I'm long the stock in here and I've caught this phenomenal run, how do I protect myself? Well, the main way is you're trying to protect your downside, right? And the thing you can do with that is you can buy a put. That's the first way. But the puts may be a little bit expensive because implied volatility has increased with this thing anyway. So the collar then is buying a put and selling a call. And the idea is that you're going to offset the options value so you're not laying out a lot of premium, right? So if we go over to our options chain in this one and just walk through, the thing I love about a collar though is to basically be able to put on insurance for relatively no money, right? So I can buy and protect my position, my portfolio with not spending a lot of money. So I'll give you an example of what I'm talking about. So in Oklo, let's go out a little bit. Let's just say, let's pick a month out here and just a random expiration. Let's go out to the 1017s. Again, just a little bit of time. So if I were to look at my upside calls, you can see how expensive a lot of these calls are because of the momentum that we've had. So I could say, how far can I get? Where am I willing to go? I don't really have an idea of how much I have to protect. So first thing I should do is look at how close do I want to protect myself. So if I'm looking at, let's say I don't want to let it go back more than, let's say, $5, that'd be the 133s for 15.75. I can go to the upside and say, you know what, I can just sell an option that's, in this case, because there's really good skew, I can go sell like the 149s and basically sell that option for 15.85 and say, buy my other puts down here. And what that does is it gives me a $5 protection on the downside, and it gives me, what I say it was, 49. So we're currently trading around 38, almost $10 or $11 to the upside. So it's a great strategy in theory. And you can keep going out in time if you really want to protect the position, depending on how long you plan on holding it. So I do like the collar. And I would say it's probably one of the better strategies for what you're talking about, because the implied volatility is a little higher. So that would be I think it's a good call. But I would just be a little wary of, may want to go a little further out in time, because the further out in time, it's going to cost you more on the puts, but you're also going to be able to get a really good call premium on that. And you can get a little bit wider on the call side because of that skew.
All right. We had, I think it was RJ was asking about, it was D3 was asking about Lululemon, if you see anything in LU.
Sure. LU. Actually, let's look at on the chart first. So LU. So LU. So Lulu has been absolutely destroyed, right? This whole tariff model, they came out with multiple earnings on this, and this was an earnings drop in here. I do like it coming back into the gap, right? So if we were to zoom in a little bit, let me just recenter this and show a little bit more. So you can see if we start to come back into this gap, I think the institutions will start to really jump on board here. But if you look back in the past, we never really recovered from the last gap down, right? So this gap down has just been absolutely sold into. So I think we start to show a positive sign here, and you can see this really start to pop a little bit. So that high there is 176.18. If we can start to get above that area, then you're going to be trying to play for the gap fill. So the ideal spot's up there at 200. So that's a 30-point move, pretty aggressive, but maybe you want to take some profits off or get a good roll in up here. That's about 180. What's that low there? 185, 186. So if you're playing the high here, what I say, 176, you may want to do like a $5 roll along the way here, but ultimately fill this spot here, then try to come back up and fill the gap, maybe even to something like that low there, which is 195. That's a pretty good move. So if they really can get a hold of this market and we're starting to see things jam, look, there's other like cheaper alternatives, like a Nike has kind of had the same type of pattern. It's been beaten up, but it doesn't look as good, right? It just doesn't look like it wants to get up and go in here. There was some negative news in here the other day. But yeah, I like the Lulu chart. I like that better than that. Under Armour could be another one that you say, is it basing? Not really, right? So I see the same thing as Nike, kind of selling off. So Lulu out of those three looks the best to me. And the only problem with Lulu, it used to be really expensive, but because the options have gotten the stock price has gotten a lot cheaper, trading 173 versus like 400, the options aren't that bad, right? So they're getting, or I should say they've gotten a lot better. So 395, maybe you want to give yourself a little time, because that full $30. So I may go out an expiration or two, maybe like the 1010s, and see if I can get up there. 1010s, they're obviously a little more expensive here, but maybe do it with a call vertical. So I'd say maybe like I do a 175, 190 call vertical, right? That's going to give you good room. And maybe I got to come in a little bit, get a little more juice in here. So 175 is $6. And no, it's actually not that bad. So 175, 190. I can get into that spread for $5 and basically have $10 potential of profit on that. So that would be something I look at there, definitely.
All right, some Fonzie's actually saying he has, and I'll show it. He has an iron position, the 45 Jan 15, 2027 calls. He's already up more than 50%. I guess the question is, do you do anything around that or just let it ride? But that's his
So
position.
yeah, I mean, look, it's great that you have a great profit, but you put a lot of money into holding this thing for a long period of time, right? So all the way out in January, it basically becomes, you're not going to get that same gamma exposure with those options increasing. So we look at the IREN on the chart. I did show it a little bit earlier, but IREN, and you can see how well that's done. I mean, look at the chart. It's been absolutely insane, right? So something like that, if you have some profits, what I would consider doing, again, this is going to be up to you, but what I would consider doing is rolling in and up. So you don't have as much exposure all the way out here unless you really truly believe you're just going to sit and hold this forever, right? If that's the case, then I would definitely consider a roll up. So if you're in something like a 20 call and you've gone up to 40, so you've doubled your money. Or again, if you got 50%, you're probably saying it's maybe like a 30 call and you've gotten up to 40, right? So that's not bad. So maybe you roll up to the 40s or maybe you roll up to the 45. So if it does have a pullback, you're not going to get hurt as bad. But my only concern is you're just so far out. Now, the other thing you can do is sell something against it. It's a little concerning of how close you'd want to sell because of how big the momentum has been. And I don't know if it's justified to sell something really in the near term, right? There's really just not enough premium to really help you offset really far away because it's such a cheap stock. So 42 is at the money's right now. In the near term, if I want to be something like $10 away because this thing could run, is 50, 52 or 55, I don't want to sell 18 cents. That doesn't make sense. But maybe the 50s are, right? If I'm going to expire this week and I can try to capture 50 cents, do you think you can move up that much? So maybe you consider a roll and then maybe sell some premium against it to help offset some of the decay.
All right, perfect. We have about 3 minutes left. Someone tossed out Tesla there. Is there anything you see in Tesla?
We've been trading Tesla aggressively to the upside, and look, Elon coming in has really kind of set the stage. So the only problem with Tesla right now is the options got kind of expensive, right? So you're trading at the money, it's $10. So something like this, you have to play. We actually used a call butterfly, which is a little bit different. I can actually show you something like that and simulate real quick. And let me just show Tesla, TS. I have a butterfly right there already in the ASML. How about that? Tesla, and I want to come over here to butterfly. So call butterfly. I don't want to set that. I want to pull up a butterfly. So I think butterflies are, nope, a little bit higher. I don't want an iron butterfly. I want a long call butterfly. So there's a long call butterfly. Now with this, I'm just going to spread these out a little bit just to give you a look and feel of it. So if we were to say what I would call this is a directional call butterfly. So what I would want to do is not be centered around where the at the money is. I would want to move all of my strikes up to be out of the money. So let's say I do, let's just say a $10. I think we're trading somewhere around 435 and change. Maybe I'll do like a 445, let's say 455, and then do like a 465. So it's $10. So, and you can see what happens in here. This is on, I believe I'm probably going to be on, let me expand the top area here. So I'm on October 10th. Again, this is just the way the strategy defaulted. You can move that in, you can move that out. The nice thing about, or I'd say maybe the bad thing about this is that you have to realize the perfect max profit you have to be at expiration. So I wouldn't go too far out. It gets kind of interesting because it looks really interesting when you do like December and you're like, oh, these things are just so cheap. But the reason is because you have to time it perfectly and there's no way to really say December. So I'd probably keep it to the shorter term on this one and be able to take advantage of this. So something like that, maybe like an October 10, maybe an October 3, maybe the most I'd probably push it is the 17s. And you could get wider, right? The wider you get, the more it costs, but the more money or the higher the potential is for profit. So something like that, I think, would really keep the cost down and allow you to play something like Tesla because the implied volatility has jumped up a little bit.
All right. Great webinar, Ryan. Thanks for bringing this to the Chameleon community. We try to do this every Monday, at least once a week, 4:30, as long as Ryan can make it. He's a busy man with a busy schedule, but this is super helpful to the entire Chameleon community, Ryan. So thanks for bringing it. We did have a question about, and I'm assuming it's about the price of OptionsRobot. I think it was from Henry. So could you explain the price and the
Sure.
And how it works?
Yeah, so we do a 14-day free trial. We have a paper trading account that you can get access to, and that's a $15 a month. So you can test around, play around with the system, figure out if figure out if the automation is going to work for you, if you like it, and then to connect to your broker, it's $50 a month. Pretty straightforward.
And the brokers you connect to again are?
So we connect right now to Schwab. We connect to Alpaca, and I didn't know Alpaca was as big as it was. Alpaca is bigger than Tasty Trade and TradeStation. I didn't know how big that was, but that blew me away. And we also connect to Tradier. So Schwab's one of our bigger names, and we're working on connecting to. I know you guys love interactive brokers, so we are working to get the APIs for that as well.
All right, perfect. Well, Ryan, thanks for doing this to the Chameleon community. Super helpful, and we'll see you next week, my friend.
I appreciate it. Have a great night.
Thank you. Hey, everyone. Thanks for joining us today for another episode of some after-hour ideas with Ryan. I hope everyone enjoyed it. If you have any questions, you can always email us at support@MarketChameleon.com. What else do I have to say? Oh, tomorrow's morning webinar with Dimitri is canceled, as is the next day. He's away. So I have scheduled 2 pre-recorded webinars. If you go on at 9 a.m., you'll be able to log in and chat with fellow communities. That's available. So go ahead and do that. And if you're not on tomorrow, follow us any other time. So Thursday and Friday, we will do our normal webinar series at 9 a.m. So also for Market Chameleon, you can go in the corner and log into the 7-day free trial and give Market Chameleon a try. Marketing Chameleon and OptionsRobot work really well together, so it may be something for everyone to give a try, and they're both free trials. So thanks for joining. Thanks for being a big supporter of Market Chameleon and OptionsRobot. Everyone have a great evening. And I will see you live back on Thursday, and Ryan will see you next Monday. Have a great day, everyone. Bye-bye.